So today on the Accounting for Our Community podcast, we have partner Mustafa Dossajee joining us today to speak on tax and cryptocurrency. So before we begin, I'll share a little bio about Mustafa. Mustafa is a assurance and advisory partner at SB Partners, a trusted advisor to his clients. Mustafa looks out for key critical factors to help clients find their overall success. He helps with establishing business structures that utilize the most efficient tax vehicles and provides each solution that is tailor-made to his clients' unique situations. Welcome, Mustafa.
Thank you, Brittany.
So, tax and cryptocurrency, it's very new. In the last few years, we never really had considered this as much as we are talking about it now. The CRA has its eyes on cryptocurrency, and they are expecting that cryptocurrency is reported. So for someone who's just kind of getting into this space, or maybe even someone who's been in it a while, are cryptocurrency transactions taxable in Canada?
It's a great question, Brittany. So I'm actually quite excited to do this session because crypto is something that's relatively new as an asset class, and not that many people are very familiar with it. So it's the concepts are relatively new and they're still developing over time, right? And there's no specific guidance in the Income Tax Act that's specifically talks about these cryptos. So we have to look to other forms of guidance in the Act and to decide how these transactions are dealt with from a tax perspective. Just do not underestimate kind of the magnitude of these transactions. The crypto market, if you think about it, the cryptocurrency market is, the capitalization of this is in the trillions of dollars, right? So
it's huge.
We shouldn't underestimate, the magnitude of, what can go wrong if something actually does from a tax perspective. And governments and revenue agencies are catching up pretty quickly, so they were a little bit behind, I'd say, when this whole thing came about. And there's a common misconception that these transactions are anonymous for an individual.
Okay.
And I'll explain what I mean by anonymous. So they think that if it's anonymous, maybe it's not taxable, and it's escaped the tax net, so to speak, right? So from an anonymity factor. What happens is when you are transacting in the crypto world, you're not going out as Brittany, right?
Right.
You are really just a series of numbers and letters on a ledger somewhere, right? Or on a network somewhere.
Right.
So when you transact in, say, cryptos or Bitcoin for that matter, which is probably the most popular cryptocurrency, you're not out there as an individual, tracked your social insurance number, none of that. You're just out there as this node or this letter or number on a network. So that often leads to people thinking, well, nobody knows who I am, or they don't understand that, well, if there are certain transactions that are done within that network and don't come out of the network, that they potentially don't have tax implications. But in a nutshell, they do, and we'll get into that. So from a Canadian tax perspective, the underlying principle is that if you as a Canadian tax resident, you're supposed to declare all your worldwide income is taxable, right? So if you make income anywhere in the world, that's taxable. So it's your obligation to report that taxable income under the assumption that you can quantify that in Canadian dollars. You need to report that income on your tax return and pay tax on it.
Right. Okay. So it is taxable.
Absolutely.
Okay. Now, how is cryptocurrency income taxed, and could you talk about capital gains versus income treatment?
Yeah, so now that we've determined that it's most probably taxable, there's kind of two ways it'll get taxed. One is as income, and we can talk about business income, so to speak, where you're out there saying that I'm conducting a business or I'm conducting these transactions in a business-like manner. Right? And with business income, that's 100% taxable at your marginal tax rates.
Okay.
And the other side is a capital gain, where you only have 50% of the income taxed at your personal marginal tax rates.
Okay.
And then on the flip side, if it's business losses, those are 100% deductible against your income. And if it's a capital loss, that's 50% deductible, but only against a capital loss. Against a capital gain.
Right. Okay.
So as you can see, there's clearly a bias. If someone is generating these, generating income from cryptos is a bias towards treating that as a capital gain for income purposes, because it's only 50% taxable. Whereas if it's a loss, there's a bias towards treating it as a business loss,
right?
So you can deduct it against all your other income, right?
Right.
With respect to kind of how you make that determination, that's based on fact pattern.
Okay.
So I'm going to take a very basic example just to explain what I mean by fact pattern. You can think about, let's say, we'll use Apple stock as the example, just to get away from Bitcoin or cryptos a little bit, so we can relate it to something that everybody's aware of. So let's say it's a stock, and we'll use Apple as an example, right? So say, for example, you have $20,000 in your savings account, and you say, hey, I'm going to buy 100 shares of Apple. You buy those 100 shares of Apple for $20,000, and you sit on those, you don't monitor it, and after 1 year's gone by and you look at your trading account and you say, oh my God, it's gone up to $25,000, and you cash out.
Right.
You made a $5,000 profit.
Right.
So based on that fact pattern, you're under the assumption that you're not a professional stockbroker and you're just there, hey, you have some excess cash lying around. There's a good chance that that'll be treated as a capital gain.
Okay.
It's only 50% taxable.
Okay.
Whereas in the case of, let's say you borrowed $20,000, you buy these Apple stocks for $20,000, and every week you're monitoring. You have some specialized knowledge maybe of the stock market in general, and you're trading this every day or every other day. If the price goes up, you sell it. If the price goes down, you buy it back. And same thing, at the end of the year, you have $25,000 you're sitting on, right? So it's gone up from 20 to 25. That $5,000, based on the fact pattern, there's a likelihood that that'll be treated as income. So 100% taxable, right?
Okay.
So that's kind of the distinction between capital gains and income treatment.
Right.
So same thing with Bitcoin. So again, if you apply that to Bitcoins or cryptocurrencies in general, it'll be exactly the same principles that apply.
Right. Now, with what's happening in the crypto world, we've seen a nosedive. So would most be reporting this as a business loss?
So if they're cashing out, there's a tendency for someone to treat that as a business loss, absolutely.
Okay.
And I'm sure CRA is looking for that.
All right. So what are the different types of transactions that can be conducted using cryptos, and how does one measure transactions conducted in cryptocurrencies for tax purposes?
It's a great question, and I'm going to kind of break it down into 3 types of transactions overall. There's many more, but we'll look at kind of the 3 main ones for now. One is mining of cryptocurrencies. So mining, when you think about it, and I'm not going to get into a technical definition of it because I'm not qualified to do it actually. Mining is where you buy some computer equipment and you tell the network of that cryptocurrency that, hey, I'm available to perform these transactions on the network and verify that transactions have occurred.
Right.
So with cryptocurrencies, what it is, there's an underlying, the underlying is the blockchain, right, for a cryptocurrency. And that blockchain, what happens is you verify certain transactions that happen on the blockchain, and those get recorded on a ledger saying that this is a legitimate transaction.
Right.
So when you're mining, what's happening is you're saying that, hey, I'm now available to do this verification, and as a reward, you get cryptocurrency as a reward, right?
Right.
So if you think about it, you're buying a fixed asset, which is this computer equipment. You're telling everybody that I'm here, I'm offering this service of mining, and you're getting rewarded for it. Sounds like income to me, right? So probably 100% taxable.
Right.
Now, the question is, how do you measure that income? With the way mining works is that you get a payout every so often. So every couple of units of the cryptocurrency, after you've generated a couple of crypto units of mining income, that gets paid out. When you get paid out, or when you've earned that mining reward, as it's called, right? That's when it's treated as income.
Okay.
And the way to do it is you have to convert that into fiat currency when you've earned it.
Right.
So easiest way to do that is if you go on any kind of crypto exchange or website, you could probably get that number online.
Okay.
So if you've generated, say, 1 Bitcoin in mining, again, I don't think people are mining Bitcoin these days as individuals. It's a bit too expensive, but let's assume for hypothetical purposes, you've received 1 Bitcoin in mining income. And when you receive that payout, when you've earned that payout, you go online and say, okay, Bitcoin was worth $19,000, and that's your mining income.
Okay.
Right.
Okay.
The second one we'll look at is buying and selling of services using cryptos, right? So let's take a quick example. Let's say SB Partners is a tax consulting engagement for one of our auto dealership clients, right? And the client says, well, I don't have any money to pay you, no Canadian dollars, right? Our bank account's empty. Can we give you one Bitcoin? And SB partner says, yeah, absolutely. We'll take one Bitcoin, right?
Mm-hmm.
So again, that's income to us. And that Bitcoin will be translated on the date that, you've earned that income. So again, it's easy to convert that into Canadian dollars.
Mm-hmm.
Thirdly, you could be in the business of, buying and selling cryptocurrencies. No different from buying and selling stocks. So very similar concept, right? Again, when it comes to buying and selling these cryptocurrencies in general, and I'll call this speculative kind of, either you are running a business or it could be, capital gains treatment. So that, again, that's based on the fact pattern that we talked about earlier.
Mm-hmm.
But how do you measure how do you measure how much income to declare on your tax return when you're buying and selling these cryptos? So let's say you buy, again, a Bitcoin for $20,000 and it goes up to 25 and you sell it for 25, that $5,000 gain.
Mm-hmm.
If it's converted into Canadian dollars, that's now a $5,000 gain for tax purposes.
Right.
Often cases you can't directly convert it into Canadian dollars. So what happens is you have that Bitcoin and you buy Ethereum with it, for example, right? Worth $25,000. So at the date you do that transaction, so you've converted it from one cryptocurrency to another, you'll have a realized gain at that point.
Okay.
So it's not only when you convert it into Canadian dollars, but even if you convert it into another cryptocurrency, that'll trigger a gain or a loss for that matter, right?
Interesting.
So generally, that's kind of the three types of transactions we see in common.
Okay. And what about paying employees in cryptocurrency? Is that similar?
So I don't know why someone would want to be paid in cryptos, but so kind of you can pay employees in cryptos if you have an agreement with the employee. We do find with startup companies they sometimes pay their employees partial wage and then they give them partial compensation in cryptos, such that if the crypto does well, the employee benefits, right?
Right.
So you can, however, keep in mind that with the compensation in the form of cryptos, source deductions will still apply.
Mm-hmm.
So you do have your income tax, CPP, and employment insurance source deductions that you'll have to remit to the government, and those will be in fiat currency or Canadian dollars, right? That
Right.
you'll have to pay the CRA.
Right.
Yeah.
Okay. Now, is staking of cryptos taxable?
So staking, again, with non-technical definition here,
Yeah.
Staking is really where you have a block of cryptos, almost like mining, but you have a block of cryptos, and again, you're putting those out there into the network and telling the network, you can use my cryptos to verify transactions on the blockchain, right? And again, you get a reward for staking as well. So to me, that sounds like income, so probably 100% taxable. But it's no different, I'd say, than you having $20,000 in your savings account. You tell the bank, put this in a GIC, pay me interest income. Right?
Mm-hmm.
So again, 100% taxable, that interest income. Staking would be very similar.
Okay.
Yeah.
Okay. Now, NFTs. Are NFTs transaction taxable?
So this, as we said, is fairly complex.
Yeah.
New types of transactions like staking, mining, NFTs. NFTs are what they call non-fungible tokens.
Yes.
And just to, again, give a very crude definition, a non-fungible token it's something that's, it's the ownership of an asset or a cryptographic asset, as they call them, in something that's very unique. For example, an image or a digital piece of work, or even virtual real estate. Yeah, that exists. I didn't even know, but yeah, there's virtual real estate that you can buy, right? So the question is it taxable or not? If you look at the ways, the different ways you can use these NFTs, or different types of transactions with NFTs. So one example is when you create the NFT yourself. So you're creating an image and you're telling people that, hey, I have this image, and you now sell that image, right? So you're buying and selling, or you're actually creating the NFT itself and selling it. Two is buying and selling of NFTs. So if someone's already created and now you're buying and selling them, you buy it for low and hopefully sell at a higher price. That's buying and selling of the NFTs. And thirdly, I believe you can also stake these NFTs. So all those types of transactions, as long as there's a gain component to it, that's probably a taxable transaction.
Okay. Is there any other considerations or insights that you want to share on cryptocurrency and tax?
Yeah, I'd say it's fairly complex.
Yes.
So, do consult before you get into anything, or, if you're unsure about something and it's still evolving. So, like the NFTs is something that's fairly recent, staking is something that's fairly recent. And the legislation hasn't caught up yet with all this, right? So they're looking to, areas in other aspects of the tax legislation to kind of make the determination what the tax treatment is.
Right.
So even though you take a position today, that may not necessarily be right tomorrow based on the legislation, right?
Right.
So just consult is what I'd say.
Yes. Thank you. Well, I think the moral of this story on cryptocurrency, speak to a professional advisor before investing and ensuring that your tax planning is set up appropriately so that you don't have any future liabilities.
Absolutely.
Well, thank you for your time today, Mustafa.
Thank you, Brittany.